Hello everyone, Clifford Bennett, Chief Economist, ACY Securities. I hope you're having a good day. May I just say that in several decades of market experience, there's only been one or two, maybe three other occasions where markets were as volatile as they were in the last 3 days. Those last 3 days, particularly in the US stock market, really were something else. In fact, Goldman Sachs did a study and found that the last 2 weeks of trading in the US 500 index, S&P 500 index, the ease of trading had declined 88%. In other words, it was almost 10 times as hard to make a profit. So if you've been doing well in these market conditions, well done, but that could be an omen for these market conditions. But anyway, I think what we're going to see now is markets settle down, and we had a sense of return to normality yesterday in New York trading, at least with the release of the US Consumer Price Index. So it was kind of a mixed bag because the headline CPI index declined slightly from 0.5% on the month to 0.4%. And really, these are surveys, so these 0.1 differences, don't get excited about them one way or the other. I mean, they're not a hard and fast, accurate analysis of what's going on in the US economy. They're just a survey of a small part of the economy, and then it's extrapolated as being representative of the entire economy. So slowing from 0.5, 0.4, neither here nor there. And similarly, for the core inflation number, which accelerated, if I wanted to put a positive or a hawkish spin on that, but no, it just moved up from 0.4% to 0.5%, the core. So the headline, 0.5, dropping to 0.4, the core, 0.4, rising to 0.5. Inflation was resilient, you'd have to say, still buoyant above normal levels, although not spectacularly above normal levels in terms of the monthly data. Sure, the through-year data is still 3 times the Fed's target range, which means the Fed, if we hadn't had a banking collapse, several banking collapses, 3 in a week, in the US, then we would probably be looking at a 50-point rate hike. But given we've had those events, I think you should be expecting from the FOMC, from the Fed meeting, either no change, just a momentary pause, and they would highlight they expect to resume interest rate hikes, but they just want to pause given the banking sector turmoil, or 25 points, because as the chairman said, he could reaccelerate if the data continues to push that way. The data really isn't pushing so much for the Fed to be super aggressive, and we've had that banking turmoil. So I don't think we're actually going to see that 50-point hike, probably 25, but also it's almost flip a coin, nothing or 25. Of course, we're still another week away, and if in that period markets have completely calmed down, because they're still a little bit skittish, if they've completely calmed down and the data looks stable and the banking sector looks stable, they'll definitely do a 25-point rate hike in that situation. But we have to see how that evolves over the next week. So one of those two scenarios, but the 50-point doesn't look likely after a banking crisis as the US has just had. Now, a lot of people are arguing, as did I, that depositors should not all of a sudden be fully protected. It's not capitalism. It's the Chinese model of state intervention. I mean, if the US wants to go the Chinese model of state intervention, so be it. But that's certainly what this banking situation now represents. And there's so many things wrong with the program, how it's structured, and its impact on various people in relation to a banking crisis, that it is really, I'm not sure if it will stay the test of time. I think, Congress could unwind it, but that might be 3 to 6 months from now. For the moment, though, that new program still exists. It wasn't a good idea, I don't think, but they've done it. But can I say why I think they've done it? Because in both situations, Signature Bank in New York and Silicon Valley Bank, a lot of the elites of America, a lot of the supporters of the Democrats, yes, there is a political element, have their accounts with those banks. So, especially the Silicon Valley Bank, basically, if they let that go, they'd be making enemies in the tech sector. So they didn't want to do that. I really do think there is an element of politics in this and not just good economic policy. And that would explain why this is such a different reaction to previous banking crises. So it's something to bear in mind as to whether that program gets maintained long term or not. In terms of in the Ukraine situation, I have to mention to you that Russia is making strong gains in Ukraine, as was expected. That the sort of sugar-coated Western view of what's happening there is really wearing thin now, as Russia has encircled Bakhmut, and that also involves gaining a whole lot of high ground, which will work for an artillery advantage to the Russians in regards to other cities or frontline aspects in the region. So it is a very important development. Now, Russia making gains in Ukraine is going to again push NATO towards getting more involved. And in the last 24 hours, we saw a US drone downed by a Russian fighter. And the Su fighters are very good. And a lot of people are suggesting the Su fighters might be better than, some of the American fighters. So what was happening there, it sounds all very bad. The Russian fighter jet downed the drone. What actually happened was the US was spying on Crimea on Russia's naval base with a drone, and it was in international waters, but it had crossed into what Russia has always declared as its military zone around Crimea, given that it is in a state of war, and the Americans knew that. The drone went into that territory to really provocate. Two SUs were scrambled. Russian fighters were scrambled to intercept the drone. They proceeded to dump fuel on the drone and maneuver in front of it, basically giving the drone pilots back in America or wherever they were a hard time for coming so close to their key naval base in a war zone. And then there appears to have been a collision, which the Russians denied, which the Americans highlight. And it would appear that it's probably an accidental collision, for it's not good for a fighter jet to have a collision in the air. So I don't think that was done purposefully, and I don't think the Americans think it was done purposefully either. But there were aggressive maneuverings, and the drone and the Russian fighter plane connected, and the drone went down. So I think to make too much of that would definitely be a storm in a teacup. I think the Americans will continue to sort of jawbone it a lot, but there's not going to be any kind of military response to that development. And do be aware that the Americans, Australians, British, we all provoke, aggravate, and attack each other's forces from a distance all of the time for the last 20, 30 years. I've seen this happen when I was a naval officer. I've seen Australians, and I won't say even what arm of the forces it was in, but I have been in the field and seen an aggravation towards the Russian by Allied forces in total peacetime. Every nation does it to every other nation. The Russians do it, the Chinese do it, the British do it, the Americans do it, the Australians do it, everyone does it. But obviously, respective countries want to highlight when someone else has done it to them. So just bear that in mind when you hear all these stories, be they in the China Sea or near Crimea or any other part of the world, because things go on in other parts of the world that we just never hear about. And I can tell you that most assuredly. It does, though, for markets, have zero impact on the day, because people in markets do not want to be thinking about conflicts. For instance, if you were thinking about a conflict between US forces and Chinese forces, you would not want to be long Australian equities or the Australian dollar on that day or that week or month. That would be a very ugly situation indeed. And for major global markets around the world, the situation in Ukraine is something people don't want to believe. They don't want to look at it. Who wants to look at losing? Be aware there's been massive demonstrations in France, as we know, against the pensions, but it wasn't just against the pensions. Those demonstrations were against NATO, against the sanctions on Russia, against the war with Russia. They're even about not wanting France to be a member of NATO anymore, as well as the pensions. And we saw over 2 million people in the major streets of France. In fact, there were demonstrations in 200 cities and towns in France on the same day. So these were massive demonstrations. And you're not seeing too much of it in our press, but if you were to go and look at various other means of gathering your news, you'll see that this was almost a civil war in Paris in the last week sort of scenario. There were thousands of police in military garb struggling against overwhelming crowds. So police cars burnt, streets wrecked, all that kind of terrible thing happening. And a lot of it is angst over the sanctions against Russia and the idea that some people in France want to go war with Russia. Not everyone feels that way. And just also remember, in regards to the conflict, our view, our Australian view, is a minority view. Only about 10% of the world's population is really, in terms of national representation, is really anti-Russia. I mean, for instance, the world's a very complex and mixed place. Do not think it's a unified world against Russia. It isn't. And I'm not supporting Russia. I'm just trying to give you the objective lay of the land so you can trade more effectively, invest more effectively. For instance, the South African Navy 2 weeks ago was doing joint naval exercises with the Russian Navy. India, China, a whole host of countries, even Mexico, are not so anti-Russia as many of us think perhaps they are. So do realize that this is not a clear-cut situation as the way it's often portrayed, and that this war still has a long way to go, unfortunately, and the people paying the biggest price are the people of Ukraine. So, our thoughts go to them, and we hope this conflict ends soon, but it does not look like it will at all. Markets have decided not to look there. I've spent a bit of time on it, but markets have decided not to look there, and that's why markets could be caught by surprise should there be an increase in Russia's advance through Ukraine, which is already significant, and it should be considered that that advance could provoke greater NATO involvement, and that would be very worrying. And then at that point, it could be a startling surprise for markets. So I am very cautious about being long equities, even though they've had some tremendous rallies in the last few days, as they've had tremendous losses. I just still think you need to be very careful that surprises can still emanate from the Ukraine conflict. Overall, in terms of the US economic situation, stability, but with some concerns in the banking sector. I think it's nice that all depositors are now covered, but it also creates problems, that policy, but that would take a much longer time frame to play out, so traders, investors will neglect that for the moment. The FOMC, as I said, expect a 0 or 25-point rate hike. Clifford Bennett, Chief Economist, ACY Securities.